Well, good morning, everyone. Welcome to this session about can fintech be a force for good? I'm Joao Silvestre. I'm the economics editor of Expresso newspaper here in Lisbon. And we have to talk today with us two speakers. Noha Shaker, which is a founder and CEO of Egyptian Fintech Association. Noha is working in financial industry for more than 20 years, I think. And also Cosmo Spens is a co-founder of CLOWD9, which is a cloud-native fintech that provides solutions, I think, to different industries and businesses. Welcome you both.
Thank you.
Noha, let me start with you, with picking our talk, the title of our talk, and asking you if do you think that fintech are a force for good?
Thank you very much for having me today, and I'm really pleased to see such eager audience wanting to learn more about and perhaps engage regarding how fintech is a force for good. Let me ask you a question first. If you're in the financial industry, please raise your hand. Banking, insurance, okay. If you are in fintech, in particular, as in a fintech startup, a tech-enabling business, please raise your hand. Okay. If you are in development finance or anything that has to do with climate change and mobilizing climate finance, green tech, please raise your hand. Oh, okay. Well, that's a promising audience and a promising discussion, hopefully. The answer is yes. Fintech is a power for good. And there are actually three messages that I want to leave the audience with today. Fintech and inclusion, and I'm not just talking about financial inclusion, but social inclusion as well when it comes to offering access to services. The second key message is fintech and the role in combating climate change, mainstreaming green tech and environmentally friendly solutions as a means to pushing the entire world, especially the growing economies, into a green growth trajectory. The third, and one actually it's can be the most important in there because it's all about solutions, and it's the role of fintech in enabling innovative financial services, the emergence of new financial services and vehicles that can actually support the transition to green, the likes of green bonds, the likes of nature-based financial solutions and services and the like. So those are the three key messages we will discuss today. I hope that has answered your questions, Joao.
That's perfect. But, can you give us some examples of how that works, that inclusion that you mentioned works in practice, some examples?
Well, there are multiples of examples in there. So I wear multiple hats. The closest to my heart are my engagements with non-for-profits, whether it's the Egyptian Fintech Association or the African Union for Fintech, Africa Fintech Network, and definitely being a senior climate finance advisor for the UK Aid. We have a huge program called Financial Sector Deepening Africa, FSD Africa, and we work on building the capacity of the financial industry and the entire ecosystem around climate change. The examples there are great. I mean, one of the clearest, actually two examples there that I wish to share. The first one is out of Kenya. Have you heard about M-Pesa? If you have heard about M-Pesa, raise your hand. Yeah, it's like the biggest success story offering financial services to the unserved. Prior to M-Pesa, the average Kenyan had absolutely no access to any means to transact or transfer money or deal other than cash. It is a platform that was built by a telecommunications company, building and leveraging the reach to individuals and small businesses, and it was a huge success. What are the direct and indirect impacts of launching M-Pesa? Number one, now you have people who actually use digital money carrying out transactions. You have a series of micro and small businesses that actually uses M-Pesa to enlarge their customer base. You have financial institutions such as insurance companies building on the platform that is M-Pesa to offer access to microinsurance and services that could have never been offered to that particular segment, bottom of the pyramid, and small businesses, if it weren't for the fintech solution that was held in there. The second clear example is actually Egypt's first unicorn. It's called Fawry. Fawry started with an agent banking model. For those who are not aware of Asian banking, banks has always been focused on serving high net worth individuals, upper class, upper middle class. I am a banker, so we're not bad. But back then, with the limited technological advancements, it was near impossible. No matter how many times you recrunch the numbers to have a model that is actually profitable to serve the bottom of the pyramid, micro and small businesses, was almost impossible. Now, things have changed. Fawry started in the year 2008. I was one of the really early supporters of the model. I tried to convince the leading commercial bank that I worked with back then to invest in Fawry. They, of course, let it slip. They were like, we are a corporate bank, that's our DNA, what are we going to be doing with a startup that mainly is about bill payment and filling in application forms and the people. Guess what? 15 years later, the same bank ended up investing in the same startup. But of course, the valuation was an absolutely different story, and they paid the worth of the company in there. Fawry now is a financial group. They offer micro lending to smaller businesses. They have a microinsurance company leveraging and building on the fintech infrastructure that was all about facilitating bill payments. So if you want to pay mobile bill, if you want to pay for your electricity and utilities, this is how they started. Now they have reached 3 million Egyptians, offering them access to finance, offering them insurance coverage, and the like. Those are two major success stories where fintech can be used not just to offer access to finance, but to offer access to services. I will elaborate on offering access to services later on. Thank you.
Okay, thank you. Cosmo, the same question. Do you agree that fintech are forces for good, and how can they be forces for good?
I do. I mean, firsthand, we launched our fintech about 3 years ago to enable kind of fast payment programs around the world in a more efficient way. We also became, after 13 months, one of the first fintechs to be B Corp certified, and that process was, from a kind of enlightening perspective, was very positive for us. It broke down all of the layers as a business to have a strong purpose, to then push out into, for example, not just from a commercially successful point of view, but also what is the positive impact we can do for these customers around the world. We're B2B, but our focus is also primarily on also being very transparent in the data we're capturing, how we measure that data. We're well aware of the terms greenwashing, where I think there's a level where a lot of technology companies are measuring data and how they want to present it versus actually what is the real data, what is the real metric. So our focus is very much about being very transparent in not just how we run our business, but also how we capture that data and then enable that for our customers as well. And it goes back to, I think the cultural perspective as well. Is the business, does it have a clear purpose? And I think, as an example, going through the B Corp process, I think, I would recommend it to every business out there. I know there's been some various reviews around that, but as a personal hands-on experience, I mean, our company has really thrived, and we're only just at the beginning of that journey. in the B Corp process. It's a very long, intense 13 months, but we are now at the beginning, and this, I think, filters through to all of the other areas, such as what Noha was talking about with regards to enabling populations that are either underserved in finance. We can bring technology to really speed that up in a more cost-efficient way as well.
And in our previous conversations, you mentioned the importance of transparency. How can fintech improve transparency in payments, in data collection? Can you give us some examples of that?
I think that starts from the company itself. Its clear version, this purpose. Is it being run with a clear vision? How is it interpreting that data? How is it capturing it? I think there's a lot of greenwashing around net zero metrics, and I think if we can enable a culture across commerce, business, where it's real data, actual data that's being presented, and also, being totally confident in, are there outages? We have to be absolutely clear, and I think that has to start with the business itself. And what was fascinating with B Corp is right at the very beginning, you have to change your articles of association. So it's actually your DNA is changed at the very beginning. And I think that's really positive. And that's about pushing transparency from day one.
And I think that transparency that fintech brings to the table are important to bring more customers. B2B, but also final customers.
But more accessible customers. I think Noha and I were talking about there's a large proportion of SMEs out there around the world that are totally underserved. And if we can provide technology and a more efficient way that are designed in a way that we can open up a payment program in 2 weeks versus the traditional 18 months that it takes, this is great for businesses.
Noha, you said that fintech aren't only about financing, but also about services. How can you elaborate a little bit more about what you mean with that?
Okay, so two of the main challenges when it comes to offering people services and scaling any service, number one is the reach. Number two is the accessibility. Accessibility, not just physical access, but also the affordability of the service that you're offering itself. What technology has done is that it has made services digitally accessible, overcoming the hurdles of physical locations, having to travel for miles and miles to get access to education, to get access to healthcare, to get access to trading activities, go-to markets, and the like. And when that happens, once you build those platforms that offer services digitally, payments was the first enabler of making those platforms come to life. I mean, if you're offering a service digitally and you cannot collect your money digitally, it would have never worked. So fintech and the element of payment made it actually possible for services to be offered digitally. What happens once you launch a digital platform that offers services? You can use the data generated out of that platform to build a series of financial services and embed them in that platform. An example, digital education platforms, the likes of Udemy and others. They facilitate payments over the platform. Now we have fintech startups offering educational loans for people who are actually educating themselves, taking the lead on educating themselves on those platforms. So it's not just financial services that fintech enables, it's also access to basic services in there, the likes of education, the likes of access to commodities like e-commerce, as well as health tech as well. And those are all, of course, data-driven models. So the financiers there know that the biggest hurdle when it comes to offering a loan, which is the definition of financial inclusion in my point of view, if you offer access to lending, then you have financially included people. Payments and the rest are not. So what's the biggest hurdle that you face if you want to offer someone or a company a loan for the first time? The absence of history of financial transactions, correct? Yeah. Now we are building on other models that are using non-traditional financial data, like the digital footprints, like financial data and payments that are not exactly related to relationships with banks. And we are alternatively scoring individuals and small businesses based on non-traditional, non-conventional data that we get out of there. And I think that covers the question. Thank you.
Cosmo, how do you think that fintechs can be useful to improve ESG standards?
I think, obviously environment is important, and having gone through this B Corp process, there's the social element as well, but also I think one of the most important, and this is how your business is governed, the governance aspect. And again, when I was talking about with regards to lending, it all runs through, it's the responsibility of that business as well, and how they operate, how they communicate with their customers, how are they communicating with their partners, their suppliers, all of that. And this is where the fintech, I think it's crucial from that, where we are enabling technology, but also we have a responsibility in what is the impact in identifying with all our customer bases. So this, again, I keep going back on the B Corp because it's, it was an intense process, but it was, I have to say the methodology was fascinating, because everything we went through to our customer base, our partner base, what are the impacts they're creating? So there was a level of where, as a technology company, there's a level of transparency that we're trying to kind of operate across all of our community, our customers, our partners. I think so the ESG element, I think obviously the environment is essential, but the social, but without the governance, neither of those will be achievable. And I think that last bit, the governance, is really important.
And you have already examples of that.
Yes, like I said earlier on about changing our articles of association from day one to actually say, as a business, as a board, we are going to actually create some social positive impact for our customer base is really important. That sets the kind of, that sets the whole precedent for how that business then operates, and then pushes the ESG side of it.
Noha, when you say that fintech are important for financial inclusion, that means also gender equality. How can be important in that perspective?
Thank you very much for asking that question. Let me first leverage and build upon that point when it comes to ESG. So one key sub-industry within fintech looks at investments and alternative investment platforms that actually offer access to equity investment in startups that may not exactly have the right risk profile for traditional investors to put in money in there. As an impact investor myself, where I build and run impact funds, not ESG funds. I have nothing against ESG. ESG is a tool to make sure that we cover risks associated with ESG within our day-to-day decision-making as entities. ESG, however, is not impact investment. So ESG works to maximize the bottom line of investors. It does not mean that you can take the hit as far as bottom line is concerned in order to deliver certain impacts on the ground, like gender equity, not equality, like environmental impact and the like. So what problem in there, if we are tackling impact investment, is the data asymmetry that is present. We are sending the wrong price signals to the markets. So if an investor like myself wants to differentiate between two projects, two investment opportunities in there, if I run the numbers, the project that actually pollutes the environment more and is costly on the long term is going to actually rate higher than the project that is environmentally friendly and costs less on the longer term. Why? Because we fail to incorporate a price tag on the pollution, on the social elements and aspects, the negative impact that this has on our operations on the ground. How can we tackle that? definitely data that supports with the transparency, helps us send the right price signal to investors in the market. How can Fintech help in there? Well, it's all Fintech. When it comes to data, aggregating data, when it comes to the assessment of those, how do you think we can carry that out manually? Of course not. And now you have even the platforms that can close the process end to end when it comes to profiling the business, how green it is and the like, until you actually release the money in there. And this covers Fintech for sustainability and everything.
Okay. Cosmo, if you have to persuade the SME manager to adopt Fintech solutions, what would be the first thing that you would say to him?
I would, well, again, it's down to purpose, and I think I would also recommend them, having gone through it myself, I would recommend a business going through the B Corp process. It's a tool, it's a process, it's exactly, it's back to, it's not about, you know, ESG is not the end game, it's actually, what is the vision of that business, what is their purpose, and that has to kind of stem all the way through. And I think the process of what we went through, we became certified in March this year, is that kind of build up, and it involves every aspect of the business. How do we treat the employees? How are they incentivized? And I think all of these kind of areas, again, but it's back to the purpose. What is the vision of that business? And back to the data. How transparent are we handling the data? How are we measuring it? And I think that's really important. But I would obviously fly the flags. We've done it, but I would recommend going through the B Corp process as a step. It may not be for everybody, but I think it's. From our experience, has been very, very, very positive.
Our time is almost over. Just one last question, Cosmo, to finish. If you have to perspectivate the future of the fintech solutions for 10, 20 years, what do you expect?
Sorry, can you repeat that question?
The future of fintech in 10, 20 years, what can be?
I hope it's open, to be honest. My concern is, where we talk a lot about transparency, I'm very pro an open culture of how fintechs are managing. It's back to data again as well, as opposed to cherry-picking data, then delivering that. So I think openness, transparency, I think for me that is the future. And there's very much a topical conversation with cryptocurrencies, digital currencies, our government's getting involved, and that's a whole other topic. But I think it is openness, transparency.
Okay. Thank you very much, Cosmo. Thank you very much, Noha. We finish here our talk. Thank you. Good morning to all.